Hi everyone, it's Elizabeth Gorham with Investors Business Daily, and welcome to Investing Strategies. On this episode, we're going one-on-one with the CFO of Chipotle to discuss what's fueling the fast casual leader's return to growth after the pandemic's onset, and how technology innovations are helping Chipotle stay ahead of the curve. Plus, ARK Invest is becoming quite the influential force in the market. We're sitting down with one of ARK's analysts to talk about why they're bullish on DraftKings and the online sports betting industry. And the IPO market has been extra hot. ThoughtSpot is a pre-IPO company in the enterprise software space that already boasts triple-digit sales growth, and it's preparing for its public debut later this year. We're checking in with the company's co-founder and executive chairman. Investing Strategies starts right now. Fast casual leader Chipotle is coming off of a fourth quarter that showed a return to bottom line growth and a second straight quarter of double-digit revenue gains. And here with me now to discuss all things Chipotle is the company's CFO, Jack Hartung. Thanks for being here today, Jack.
Hey, Alyssa, great to be here.
All right, so obviously a lot of restaurant chains took a hit amid the onset of the pandemic, but Chipotle is now delivering strong growth, and you're seeing same-store sales growth accelerate.
Listen, we're really pleased with the recent trends. We got hit in the early days of the pandemic too. Our sales were down by 35%. What we're really pleased with is our customers have really adopted to our digital platform in a very quick way. Our digital sales were about 20% before the pandemic. They reached a high of 70% back in kind of that, March, April, May timeframe. And then they settle out right around 50%. In fact, as some of the closures happened in cities and states over the last month or so, we moved back up above 50%. So this digital system that we've been investing in quite a bit over the years, and our customers were adopting, but they were adopting in kind of a step-by-step manner. It just accelerated that. It probably pulled forward by 2 or 3 years the adoption of digital, and that has come into play. And it's allowed us to turn into not only positive overall sales, but positive comps as well. And we're really happy about that.
Now, along with digital comes delivery, and another way to fuel growth is through price increases. And you said in the past that tests of price increases on delivery orders, the resistance to those price increases was low. So what do you think that says about Chipotle's value proposition to the customer?
Yeah, listen, delivery is something we were doing even before the pandemic, but it was relatively limited, like maybe it was less than 10% of our total business. And it has soared to about 25%. And we want to offer Chipotle in the way that customers want to enjoy Chipotle. And delivery is one of those ways, especially during the pandemic. We think, though, that it's going to stay after the pandemic. It's a premium convenience channel that our customers will want to use, and even when the pandemic is behind us. What we want to do, though, is make sure that the higher cost of delivering the food, of having the food come to your home or your office, is covered in that channel. So we did experiment with a number of prices, a low, medium, and high. What we found is that the customers that want delivery, they know it costs more, they're willing to pay for it. There are those customers that, as the pandemic wanes, we have seen that as they venture out, they're adopting more of the order ahead and pickup order, but the delivery channel is still staying strong. It's still right around that 20 to 25% of our sales range.
And for customers who have signed up for text delivery via mobile, that is another way to announce promotions and get some sales that way. What's the strategy around that aspect?
Yeah, I assume you're talking about, Alyssa, our loyalty program, where people will sign up not just to, they'll order digitally, but then it's very easy for them while they're ordering to also sign up for our loyalty program. So we'll give them updates on things like the cauliflower rice that we just rolled out, when we roll out quesadillas, which, we talked about the other day, that's going to happen in the near future. We can communicate new news with our customers. We can also communicate deals. We can communicate all kinds of things that we're doing as a company. So it allows us to have a personalized one-to-one relation with our customers. We also understand how they're visiting Chipotle, how often they visit Chipotle. And so we can get to know them in a way where we can offer things to them, or we can tell them stories that we think are going to apply specifically to them. So it's a much more personalized relationship, and our customers really love it.
And with the pandemic, habits clearly have changed. There's less of an emphasis on in-store dining, and in addition, I mean, there's rules preventing that in many states at this point. But drive-through is another area of interest. And so, where is Chipotle headed in terms of that previously announced initiative, and what role do you expect drive-through to have moving forward?
Yeah, we call our drive-throughs a Chipotle lane. So it's a very specific, Chipotle lane name for it. But we believe that our Chipotle lane is the drive-through of the future. And the reason we say that is there is no speaker. You've already ordered ahead on your app before you show up. You've already paid before you show up. And we agree with you on what time you want to pick it up. So if you tell us 12:15, you show up at 12:15, you're ready to go. You drive up to the window, and rather than an experience being a 3 or 4 or 5 minute experience, which a typical drive-through would be, you walk up, your order's ready. It could be a 10 to 15 or 20-second experience for you. So it's a much more convenient approach. We have about 160 or 170 right now. We opened 100 last year. We also announced that we're going to open up 200 restaurants in 2021. And 70% of those will have the Chipotle lane. So our customers have responded in a big way that this is it's a safe, a touchless, convenient, and fast way for them to enjoy Chipotle. So we're going to bring as many of those to customers as we can.
Right, reducing some of those frictions there that you see with other drive-through experiences. So taking a step back here with all of these different initiatives that we've talked about, ways to order, ways to pick up, the menu expansion, what is it that helps Chipotle stay ahead of the curve and continue to innovate with all of the other competition that you have out there?
Yeah, technology is something that we're always going to have to invest in. We've been investing for a number of years. And so even though it looks like, oh my God, all these digital opportunities, all of a sudden appeared at Chipotle, it's really been many years in the makings. I think what you're seeing with some restaurant companies out there, if they fell behind in digital, they're falling behind during the pandemic. We're seeing that the investment that we really made over the last 3, 4, or 5 years has really paid off during the pandemic. And I think more importantly, it sets us up for an even stronger exit from the pandemic. We really feel like the next few years are going to be very, very exciting for us. The fact that so many customers that hadn't tried our digital channel before were kind of forced into it because of the events of last year, that allowed them to see how convenient a digital order and pickup can be. It allowed them to see how convenient a Chipotle experience can be. And so we think that's going to allow us to leave this challenge, even a stronger company than we went into it.
Well, Jack, thanks so much for taking the time today to fill us in on everything happening at Chipotle.
Thank you, Alyssa.
And after the break, we're talking to ARK Invest about the growth of the online sports gambling market. We'll be right back.
Good morning, everyone, and welcome to IBD Live.
Okay, here we go.
DraftKings stock recently popped on news. The ARK Invest Next Generation ETF, ARKW, purchased shares. And joining me now with insights on the outlook for online sports gambling is Nick Grouse, analyst at ARK. Thanks for joining me today, Nick.
Thanks for having me.
So first, Nick, we can get into DraftKings specifically in a little bit, but let's take a step back and talk about the online sports gambling market and the potential for growth here. It still seems like we're in very early innings with this theme.
Absolutely. And, when we first started looking at the online sports betting space, the realization we came to is this is a supply and demand issue, in that there is definitely a ton of consumer demand, but the supply has been held up by regulation. And I would just add there that regulation is starting to favor more and more online sports betting. So when you look at it as just a supply and demand issue, this is definitely still very much early days.
And, even though the pandemic squashed sports for quite a while, it seems like interest in online betting surged in 2020. So this theme appears to not only have benefited from the pandemic with esports and people having to stay indoors and figure out new hobbies, but it also seems like it could be set to benefit further as the economy continues to reopen as well, with more sporting events taking place. What are your thoughts on that?
Absolutely. And you kind of nailed it there. This year was absolutely disastrous for sports. You had cancellation of tournaments, you had shortened seasons. But what we actually saw was an enormous growth in online sports betting. We grew from 2019, $13 billion in handle. So that's just the total sum of all bets. In 2019 was $13 billion, and that grew to actually $18 billion in 2020, despite the terrible year that sports as a whole had. So there's definitely demand there for online sports betting. And that 18 billion, it breaks down to around 1 billion in total revenue for 2020. We expect that to almost 18x in terms of we're going to go from 1 billion in revenue in 2020 to almost 18 billion in revenue by 2025. That's how much demand there is for online sports betting.
So just a couple of years' time. And so you talked about the supply and demand issue. So where do we stand now on more states legalizing online sports betting? What specifically are you watching on that front?
So we're watching how states are approaching this issue. And we've seen over the past few weeks, a number of very large states, Texas and New York to kind of be specific, come out in favor of, passing legislation that would allow for online sports betting. And then I would break it into specifically mobile sports betting is really where you're starting to see a ton of engagement just because of the stickiness and convenience that offers to bettors.
So talking about mobile, when it comes to DraftKings in particular, what do you think sets that business apart from others in this space?
Sure. When we looked at DraftKings in the space overall, we view this as a technological problem, right? You need to offer bettors the most convenient and easy way to place bets. And when we looked at DraftKings, what we saw was an amazing technical stack in terms of the rest of the competitors have not yet caught up to DraftKings in terms of the technical innovation that they're providing to mobile sports bettors. And that's really what it excited us about DraftKings as compared to other competitors.
Now, what other innovations are in the pipeline for DraftKings and others in this space that's set to fuel growth beyond this year, beyond the pandemic as the economy continues to reopen? What's going to keep people in that online sports gambling mode and pick up the pace, really?
Well, certainly once we get back into full swing of, live sports, that's going to add fuel to this fire, increase, regulation in terms of, we're going to see new states coming out in favor of this. But then really when we're talking, 5-10 years down the road, how does, sports betting grow? We see the esports arena to be something that really has yet to be even tapped at all. This is an amazing opportunity for this area. If you're talking about total revenues, the online gaming industry, so this is just video games now, brought in roughly $175 billion in 2020. That's more than movies, music, every other entertainment category combined, really. And so that's an enormous opportunity for sports books to enter into, and esports is, a growing segment of that online gaming space.
Yeah, and who knows, maybe some of the retail investors who tried out GameStop might be interested in doing the esports betting. We'll have to see. But we can't talk about online sports betting without mentioning the Super Bowl, of course. What kind of impact do you think that this year's Super Bowl is going to have on sports betting? I've heard DraftKings are set to have some big ads. What kind of interest do you think that this event could spark and help fuel for the remainder of the year?
Just recognition of, what's happening in the space. And I think, that takes time, and it takes events like the Super Bowl, like the college football championship to really bring awareness to consumers that have not yet realized that mobile sports betting is actually an offering in their state. This is a marketing effort, one, and then two, long-term, just allowing easy access to place bets before the Super Bowl, after the Super Bowl, during the Super Bowl. This is really what these type of events offer to the online sports betting space.
All right, great. Well, Nick, thanks so much for helping us learn more about what's driving the growth in the online sports gambling industry. We really appreciate it.
Thank you.
All right, and coming up next, we're sitting down with the co-founder and executive chairman of pre-IPO enterprise software company ThoughtSpot. That's after the break.
IBD Digital gives you access to our premium content.
The best of Investors Business Daily.
A team with decades of experience serving up actionable investing content, a sophisticated tool set to facilitate your own deep dives, and educational resources that will give you an edge in the stock market. We have over 100 years of stock market data, all focused on one thing: what makes a winning stock.
We're taking the guesswork out of investing. Subscribe now to build a better portfolio and make more money in the stock market.
Well, the IPO market has been extra hot as of late, and ThoughtSpot is a pre-IPO company in the enterprise software space preparing for its public debut. And joining me now with all the details is ThoughtSpot co-founder and executive chairman, Ajeet Singh. Thanks for joining me today, Ajeet.
Thanks for having me, Alyssa.
All right, so you're no stranger to bringing companies public. You did so with Nutanix in 2016, and word on the street is that ThoughtSpot is set to have its IPO later this year. So talk to us about being in that pre-IPO stage and what it takes to prepare and I guess make the decision to go public for ThoughtSpot.
Yeah, thank you. So for those of your audience that may actually not know about ThoughtSpot, maybe I'll just tell them a little bit about who we are, what we do as a company, and we can talk about how we plan to build the company. So ThoughtSpot is think of that as a search engine for data. We provide a cloud service that allows anyone to ask questions on their data in the cloud. And we have built a purpose-built search engine that uses a lot of new kind of search technology and AI to make it super easy for non-technical people, marketing, sales, finance, HR people to be able to ask very advanced questions. So think of that just like Google for data. Now, I can't comment on specific IPO plans per se, but I can tell you that from day one, we have been very focused on building a lasting, purpose-driven, mission-driven company. And our mission is to make the world more fact-driven. And I think the opportunity to make the world more fact-driven is practically infinite. You know, we've seen with everything happening around us across the globe, if we could inject more facts into our social life, in our personal life, in our businesses, we can all make better decisions and better choices as professionals, as individuals, and as a society. And we like to call ourselves only 2% done. We are on a very long journey, and it's our goal to build a company that can be a long-lasting company. So IPO will be a great milestone for us to hit. We as a company continue to focus on doing the right thing for our customers and adding more value to them. We don't wake up every day and think about how and when we can do IPO. But all the key characteristics of a lasting company, which is a differentiated product, a massive market, a great team, and a really authentic, amazing culture, all of those four things are present in spades when it comes to ThoughtSpot. And we hope that our goal and mission will actually come true as we continue to build.
Now, you mentioned having differentiating factors. So what do you think, can you drill down a little bit more about what sets ThoughtSpot apart from other companies from an investor standpoint, thinking down the road to that IPO in the enterprise software group, companies that are involved in data analytics? What is setting you apart from others in this space? What are you doing that can't be replicated? How are you staying on the cutting edge?
Yeah. So I, as an entrepreneur, I really think that the technology industry is evolving from being a provider of mere technology to provider of experiences. We are becoming a very experience-driven industry. The experience of being able to hail a cab, the experience of being able to consume any service, the way we consume media, being able to entertain ourselves, all of that has fundamentally changed in the last 10 years. And we have seen during COVID, we can stay at home and be able to get all the supplies we need for running our household and food and everything. So completely different experience. And I have been very influenced by design thinking and user experience from very early in my career, almost 15 years ago. And so when we were starting ThoughtSpot, our point of view was that all the analytics tools that exist in the world, products like Tableau or Looker or Power BI, they are, for the time they were built and for the purpose they were built, they were really powerful tools, but they were built for data experts. Data experts would talk to business people, understand what they need, and then build a very specific recipe called a dashboard for them. But that's a very old way of doing things. Now, when I want some information, I just go to Google and ask. I want to go to a Starbucks, or I want to find out what is the latest movie that I want to watch, and so on and so forth. I don't go to an expert and ask them and wait for 1 week to get the answers that I need. And we wanted to deliver the very same user experience for data. The fundamental differentiating factor is that we have built a lot of technology in the back end that makes our user experience very simple, and it makes data very accessible to almost a billion plus knowledge workers that exist. That category of users has not been served. And we have seen with technologies like Snowflake, which are really, really successful companies, the data that is there, if you put a front end on top of that, which is built with a 20-year-old design, it's going to reduce the value that you can get from investments that you're making in the cloud. So we want to really make the data accessible, and it's the accessibility, it's the ease of use, the smartness that we have in AI that can bring insights to you without you even asking, without you knowing that those insights exist. That is the fundamental differentiating factor. And that's why we have been able to go to some of the most successful companies across different sectors, whether it is retail, whether it is financial services, healthcare, and be able to deliver a lot of value for them.
Yeah, and speaking of all these insights that you're talking about and making data more accessible for companies outside of those experts, there come issues of security. So if that information is mishandled, there could be issues. What's the company's approach to data safety and cybersecurity?
You are absolutely right. I think the technologies that were built in the past, they assumed that data is sitting in the walled garden and nobody has access to it. Only these 5 people, they have keys to the kingdom, so to speak. So the security actually wouldn't have worked in the cloud world, because in the cloud world, data is in somewhere stored somewhere. It could be accessed anywhere in the globe by anyone, because now the workforce is also becoming a lot more distributed. So you have to think about the security architecture in a different way. And when we were starting the company, my co-founders, they came from companies like Google and other web scale companies that have thought about security in a lot more fundamental way than a traditional enterprise company. And some of our earlier customers were, the largest banks and so on, which had extremely high security requirements. So ThoughtSpot has perhaps one of the most advanced security capabilities. It gives you a lot of very sophisticated ways to set up the system in a way that there might be 2,000 merchants that are accessing data related to sales, but whatever you are supposed to see, you will only see that and not others. Even search engine, when it makes suggestions to you, because every search engine makes recommendations on what you could type or type ahead, that is also security aware. So you wouldn't even see suggestions. Let's say you are in a bank, you wouldn't see names of clients if you are not supposed to be seeing those client names in that bank.
And with ThoughtSpot being such a young company and already having some pretty big names among its clientele, 50 of the Fortune 500 companies, you boast revenue growth of triple digits, 108%, the last reported revenue figure year over year. Can you talk to us a little bit about the company's growth trajectory thus far and where you see it headed over the course of the next year?
Yeah, certainly. Like I said earlier, I wouldn't comment on very specific financial numbers on this call, but we continue to grow in an extremely healthy way, even through COVID. In fact, what has happened in the last 12 months is that earlier we were selling our technology purely as software, but we launched our SaaS offering last year, and that has taken off extremely fast. In fact, much faster than what we had anticipated, because a lot of customers, they wanted to make it access ThoughtSpot technology, but they didn't want to go through the process of taking our software and deploying it in their cloud. So with our cloud offering, it's much easier now. You can go to ThoughtSpot, do a free trial, get your Snowflake or other cloud data warehouses connected to ThoughtSpot and be up and searching in literally 10 minutes. We've had customers that connected and boom, wow, I did not imagine that I could actually be seeing my Snowflake data being so accessible and so easy to manipulate and interrogate so quickly. So the time to value is significantly reduced. The speed at which we are now closing new contracts is significantly reduced. So we are firing on all cylinders. And I think the growth that has happened in the cloud ecosystem, it has been extremely well timed for us. Snowflake IPO couldn't have come at a better time. The rate at which they are growing, the rate at which Google BigQuery, Redshift, Azure Cloud Services, this is really well timed for us to be able to be that sort of search engine across all of this cloud data.
Well, you mentioned at the beginning that you set out to build a company that would last, and triple-digit revenue growth before the IPO even happens sounds like a very solid start. So thank you so much for filling us in on all things ThoughtSpot today.
Thank you so much, Alyssa. Thanks for having me.
All right, and thank you all for watching another episode of Investing Strategies. For Investors Business Daily, I'm Alyssa Corum. Hi there. Thanks so much for watching Investing Strategies on our YouTube channel. If you want more executive interviews and analysis of key trends to watch, make sure you hit the subscribe button so you can stay up to date.